This video is meant to accompany the monthly financial template. To start you off, open up a spreadsheet, monthly financial template. Once it's open, this spreadsheet will help you dig deep to record all of your regular and therefore expected monthly numbers, both personal and business. And when you fill this out, you're going to accomplish a lot in planning to access a loan to grow your business. So let's see how this goes when we fill in the numbers on this template. Now, you'll notice right away that the white boxes are for where you fill in information, and the yellow and also the orange boxes are where the spreadsheet's going to be doing the math for you. So first we start with personal information on the left side of the sheet. Now remember, these are all monthly numbers, so I'm going to fill in some possible numbers for personal income in the top few boxes. After that, I'm going to put in some monthly known expenses like rent or loan payments or credit card payments, and then other regular monthly expenses like food, utilities, gas, insurance, and anything else specific to your business and situation. Now on the right side of the spreadsheet, we can fill out monthly numbers for our business. I'm just going to make some assumptions. If you've been in business for at least a couple months, you can enter your average sales here, as well as your monthly expenses, which should be pretty stable for things like rent and utilities, but could be variable for other factors. Now, the combination of personal cash flow and business cash flow helps you, as well as a lender, see all the important numbers for you as a potential borrower. Once we've filled out the information as completely as possible, the spreadsheet already has generated certain key information for us and for a lender like Accion. The debt-to-income ratio is a quick way for a bank to see how we might be as a borrower. And probably just as importantly, it allows us to see how we might be as a borrower. There are no mysteries here. The smaller this number in the debt-to-income ratio, the better the chances we have of borrowing money, and in fact, the better we'll probably do when we borrow money. Moving a little further down, we can look at a scenario for borrowing money the way that a lender will see this. If you put in a potential loan amount, a cool thing can happen. And by the way, to make this loan scenario work here, we should put a negative number. First, we can see how much we'll pay on a monthly basis for an inputted interest rate and term in months to pay back a loan. Try changing the interest rate to 12%, for example, and 36 months, for example, and watch the monthly loan payment change. You can try any interest rate or term that you want to look at and see how much you would pay per month. Second, the spreadsheet will calculate a debt coverage ratio. This is a very common way a bank lender will look at our loan application. For this number, bigger is better because it tells the bank that we have plenty of monthly cash flow to cover our monthly expenses. By filling out this spreadsheet to the best of your ability, you can see in advance how a bank will think of your application. And that kind of insight will really help you talk to your lender and makes you a much more informed entrepreneur.